Hello guys, this is the Maximum here once again. Welcome to today's episode of me teaching you how to understand directional order flow, like a pro. Okay, so the pair we are gonna be looking at today is gonna be BTC USD, and as you can see, we're currently on the 1 hour time frame. Okay, this is 1 hour time frame BTC USD, and as you can see, we are clearly bearish. But then, before this price actions established itself, if you were meant to, if you are meant to participate in this market, how are you gonna be able to understand that? Okay, market is bearish, and how are you gonna execute? That is exactly the answers I'm gonna be providing you all with today on today's episode. Okay, so let me give you textbook example of how to, one of the best ways to read institutional order flow. Okay, you need to understand that the market moves in a certain wave. Okay, the wave of let's say if it's a bullish market, comes from a low to a high, to a higher low, to a higher high, higher low, higher high, higher low, higher high, higher low, vice versa. In a bearish market, we're gonna see and expect market coming from a high to a low, lower high, lower low, lower high, lower low, lower high, and so on and so forth. Okay. So this is gonna be the bedrock, this is gonna be the foundation of what I'm gonna be showing you all today. Okay. And you need to understand that when you are in the marketplace, you are never gonna see price pointing in a picture perfect manner, just like this very pictorial example I just gave you all. Okay, you can't see price moving distinctively in this perfect straight line in the market. Okay, it is always going to be in a zigzag pattern. Now, it is then left for you as a trader to be able to understand how to read the price action and to understand when and how to differentiate between internal price action and external price action. Okay. For instance, in a case like this very one here, this is a bullish market. But within the bullish market, you saw a series of structural break inside the internal structure of the retracement phase of the bullish market. Okay, so you need to be able to understand all these for you to be able to do well in the marketplace. Now, currently, as I told you, BTC is bearish, and how are we gonna identify this very price action here? Let's get that done. BTC came from this very, let's just start from this low. It came from this low to this high. It's created a lower low, a lower high, a lower low, a lower high, sorry, a lower low. Oh, fuck. A lower low, a lower high, and eventually we've seen our lower low. What else are we expecting in price? That is, if we've created a lower low, if price actually have no reason to drop a little bit further, then we are expecting price to retrace back to the premium array of this very already established trend, which is at the premium array of this very range. Okay, this last created range, price is probably just gonna retrace back into it and continuation of lower prices. And that is if and if only the market is still gonna continue bearish. But if we're gonna have a structural change in the trend, if the price is gonna balance and decide to switch bullish, then we'll be expecting to have a structural shift above the last valid high that got created. As you can see, this is the last valid high, the lower high that got created in price. So if you are expecting a change in trend, then this high should be taken out, okay? Not any of these internal structure highs, not this, not this, not this high, not this high. No, these are all internal structure liquidities. So you shouldn't put them into consideration when you're trying to form your higher time frame structural basis. Okay. So In the absence of a bullish market, let's just focus on the bearish trend that is already established. So all you're just gonna do is to wait for price to retrace into the premium. How do you identify your premium? Just pick up your fib, place it from up to down. Okay. So anywhere above 50% of this very dealing range is your premium, okay? But the best thing to do is to wait for price to retrace into at least 70% region and above, which is not actually that is not identified in this my Fibonacci tool. Pardon me for that. But like, you need to wait for price to trade not just above the equilibrium, but at least into the sweet spots. And where am I expecting BTC to react off from if it's going to continue bearish? Since we had this very sweet liquidity grab that took place here, as you can see, after price traded is high, it mitigated this very level in price. It's created some form of manipulation here. As you can see, if you pay attention to the price action that took place here, you will notice the consolidation. Okay, market consolidated after it created this very high, and lots of traders definitely thought that, okay, we've already traded into this very with level in price. So the only thing that is left for the market to do is to just drop, and market went all the way up, took out their highs, took out their stop losses. That is for those that entered earlier and had no understanding of this very method, and they ended up being whooped because they probably placed their stop loss here and the market just whooped them out and started dropping. So in this our case, it is actually a blessing because it is a very valid criteria that, okay, institutional the institutions are balancing price. They're not going to have any reason to want to go above this very high. Okay, you can bank on this. So all we're just going to do is to put our entry here and our stop loss somewhere here, and that's just going to be it. And where I'm going to be targeting for my TP level is going to be at this very low. Let me show you. First of all, let's take this out. You can see. I'm gonna love to have my TP level at somewhere here. And that should give me a solid 1:5. Exactly. That's the exact down to the pip. So this is a solid 1:5. And why do I feel like this is gonna happen? Okay, even if it doesn't happen, it is just a risk at the end of the day and all a game of probability. But then don't forget, we've been bullish all this while over here. You can see price came from this low. Sorry, price came from this low to this high, higher low, higher high, higher low. This is not a higher high because it failed to take out this very previously created higher high. So this is just an internal structure high that just got created to manipulate traders to feel like, okay, we're about to shoot down. And take a look at what price did. It just came all the way down, mitigated this level, failed to break it because it is a strong low and just shoot back up. So we are not going to consider that to be, this to be our higher high. Understood? Let's continue. So from this higher high to our higher low, this is not a higher high because it failed to take out this previous high. And this is internal structure high. This is internal structure low. So from this higher low, we came all the way to this higher high. And to be honest, okay, to be honest, this very reading I did here the structural break that I postulated here was just all internal structural break to this very range, to this very bullish range that took place. But the beautiful thing is a valid low here has been broken. Okay, Where is the valid low? This is the last valid low that got created in price here. And we had it broken today, as you can see. Let's make sure that is very clear. As you can see, we had this very first tapping here, the second one, and I will actually expect price to drop a little bit further before continuation of these retracements. Okay, if it doesn't drop further, this might signal some sort of liquidity. This might signal to be some sort of liquidity grab. Like, who gives a fuck? What matters is we're gonna take our risk, and if it pans out well, glory be to God. If it doesn't, on to the next. So this is what I want to show you. And if you find this video interesting, do well to hit the subscribe button, like, and if you've got questions, you can drop it to the comment section, and always do well to look into it and give your responses. Thank you very much for watching my video. See you on the next one. On to the next.